Hello, welcome to my final short video for the year 2023. My name is Bill Wood. I am the economics editor for Plastics News. So let's get started. The dominant narrative continues to be the soft landing concept. And this is something I have followed very closely. I am not going to refute the soft landing narrative. I think that that is a very strong possibility that the economy we will get inflation down to under or about 2% without putting the economy in recession. However, I have a few lingering doubts about that. The first one is that it's not a foregone conclusion. In the past few days, the financial markets especially seem to be really putting the foot on the gas, anticipating that the Fed is going to decrease their Fed funds rate starting next year. And that's bullish for stocks and bonds. I'm not so sure that's the appropriate response just yet. Seems to be a little bit premature. And even if it's right, will a soft landing mean the same thing to all of us? I don't think so. I think the services sector is the one that's really enjoying all of the growth at the present time, and the U.S. manufacturing sector is starting to struggle. And so what that means is if interest rates don't go down soon, the manufacturing sector may tip into a very significant recession, even though the services sector is buoying the statistics and data, especially when it comes to employment and the job openings data. But for right now, all the trends are trending in the right direction, with the exception of manufacturing. I think that's stalled. But the job openings data are trending down. The employment data has not collapsed. And the retail sales data for the holiday season seems to be doing quite well. So nothing to worry about as far as the latest data. But that doesn't mean going forward that those trends or relationships won't shift a bit. But some other things that I'm worried about. I guess we'll start off with the overarching idea that 2 years ago, the prevailing forecast and narrative was too optimistic. They told us that inflation was transitory and that it would be coming down on its own, and that turned out not to be right. And about a year ago at this time, after the most aggressive cycle of interest rate hikes in memory, the prevailing narrative was that the economy would slow down to a crawl in the second half of 2023, and we'd start to see much slower growth. Well, that was a little too pessimistic, especially for the services sector. So now, what makes me think that anybody's forecast is right at the present time? I'm not saying their forecasts are wrong. I just have we'll call it a healthy skepticism. I prefer to look at the data and see what happens. So some of the things that right now I see in the data: number one, real interest rates, and that's the interest rates on something like treasury notes or the yield on treasuries. Real interest rates are, when adjusted for inflation, real interest rates are still restrictive. In fact, the Fed could lower its Fed funds rate by 25, 50, 75 basis points, and the real interest rates may still be too restrictive. That's a function of the rate of decline in not only in interest rates, but also in the rate of inflation. So depending on how much adjustment for inflation you have to you apply, real interest rates right now are restrictive. The lag time on that is considerable, and the manufacturing sector is very sensitive to those real interest rates. So that for me is something I worry about. It's coming down. It's not coming down that fast. It may not come down fast enough. On the other hand, if the Fed starts lowering their rates too soon, maybe we don't get inflation down. Still a delicate balance. I'm not sure how that's going to go. Things like the purchasing managers' indices are still contractionary and have been for a year. That bothers me. Small business confidence index is still too low, with many respondents saying they don't anticipate an uptick in business. Europe is in recession. China appears to be teetering. Maybe comes out of this growth recession of theirs, maybe it doesn't. But all of those things could put upward pressure on the value of the dollar, which is already fairly high by historical standards, That's another thing that affects U.S. manufacturers negatively, is a strong value for the dollar. It's good for the overall economy, bad for manufacturing. That's another dynamic imbalance I worry about. Speaking of foreign countries, we've got geopolitical risk that does not seem to be abating. In fact, it seems to be increasing. We have a shipping situation in the Red Sea, which could affect the price of oil. All it takes is one missile to hit one tanker, and the price of oil could really skyrocket. We have, as an economy and as a sector, benefited significantly from the recent downtrend in energy prices. Gasoline prices are pretty low. Heating oil prices are pretty low. Crude oil prices are reasonably low. That also keeps resins prices relatively low, but that could change. The price of energy is subject to a lot of geopolitical risk, in my opinion, at this time. So that bothers me. Speaking of risk, what about the political risk at home? There's a government shutdown just over the horizon. We're going to get out of 2023 with the government running, but the first couple of months in 2024, we're going to be in that argument again. Hasn't happened or been too bad so far or to date, but who knows? Then you have the election. Excuse me for thinking this could be disruptive. This election, it's a wild card to me. I don't know how the election season is going to go. All of Congress, a third of the Senate, and the president. This is going to be very acrimonious, a wrestling match right to the end, and that could disrupt some of the economic activity. Finally, I want to start with possibly some good news, and that's the trend in residential construction. Had a very nice uptick for the month of November. Now, the month of November is not a big month for housing starts, but we did have a nice uptick in that. And it looks like that trend has finally hit bottom, and that cycle is about to turn upwards. Why do I think that? Because the numbers that were causing the growth rate to be negative in 2023 are about to go into the denominator. So the year-over-year comparisons are going to be much easier, which means that the growth rate should start to become positive. Now, it's going to be important just how robust that recovery is. And we won't really have a good sense of that until probably the second quarter. The first quarter of the year is the weakest quarter for housing starts for obvious weather-related reasons. But if we can get the interest rates and the mortgage rates and everything lined up, we have the opportunity to have a very nice recovery in residential construction. That will certainly help demand for plastics products, which, as of the latest reading in November, still had not yet posted a cyclical bottom, in my opinion. Looks like overall volumes of plastics products are going to be down about at least 5% in 2023. That's a significant decline when you consider that the overall economy had fairly decent real growth. We used to be very connected to the growth in the overall economy. Now our industry is down 5%, while the overall economy is still chugging along nicely. That causes some concern. I believe that will turn around in the long run, but for the short term, I'm not so sure. As always, I will continue to monitor these trends, these data. We have a lot of things to think about and look forward to in 2024. Not all of them bad, certainly. Many of them are positive, but get rested, spend some time with your families, and come back ready to do the work necessary to get us all back on track. Remember, we're going to execute to earn our paychecks, but we're going to innovate to earn our future. So thank you again. Here's wishing you all a joy-filled Christmas, holiday season, solstice, and a very prosperous and healthy new year. Thank you.